Welcome back. Hope you're having a fantastic day. We're going to take a look at Bitcoin, crypto, and the stock markets. NASDAQ is down, so are crypto and Bitcoin right now, about 3 o'clock Eastern Standard Time. Also, I have had to turn comments back off again. It's just nothing but spam for some reason. It's really picked up lately. There were hundreds and hundreds of spam comments and posts in my last video. So I'm just going to leave the comments off for a while. Hopefully those things will go away. We'll try it again another time, but I do appreciate all the great comments, and you can just use the thumbs up for comments. So instead of comments, just use the thumbs up button, and we will track it that way. So let's go ahead and jump in and look at the news of the day. And of course, all of the talk on Wall Street today is Netflix. Netflix is losing hundreds of thousands of subscribers, and it may also be losing many more in future earnings. It came out with earnings the other day, and the shares plummeted 30% on the news that they've lost a couple 100,000 subscribers, and they've lowered their expectations for next quarter as well. So they're going to be looking at a couple of different things: reducing fees, adding advertisers, things like that. So Netflix is definitely in struggle mode. So are a lot of the FANG stocks. A couple of them are up, but most of them are down for the year. And then of course the stay-at-home plays with Zoom, things like that, Peloton, those stocks are struggling as well. Housing market is still a lot of things happening with interest rates at highs that we haven't seen in a number of years because of the 10-year the 10-year treasury, which is at 2.8% right now. So mortgage rates are based off of the 10-year treasury because the money looking for yield compares mortgage notes with treasuries, and as treasuries rise, they become more appealing because they are zero risk versus mortgage loans. Even though they're a higher yield, they're much riskier in terms of the types of capital and investors that go into those instruments. So that's the reason mortgage rates are up lately, is because treasury yields are up. So we shall see how things develop moving forward with the housing market, with interest rates rising. Of course, the higher rates go, the more that affects values in commercial and residential real estate. It takes a little while, especially in the housing market, because of the record low inventory that we're experiencing right now, especially throughout the Sun Belt areas of the country in the United States. But I know they're already starting to see impact and adjustments in Australia. The housing market there, prices are coming down. Canada, prices are starting to come down. In some pockets in the United States, we are starting to see price adjustments, but prices were way high, record high, 15% on the average median home price in the United States over the last year, which is a record high. The U.S. is lobbying fresh rounds of sanctions against Bitcoin miners and others, helping Russia evade penalties. So a lot of scrutiny in the crypto space, a lot of scrutiny over trying to eliminate people trying to avoid sanctions, whether it's the Russian government or oligarchs that have been sanctioned, trying to get around that with crypto. So a lot of tension on the space right now, a lot of regulation coming out, which again, at the end of the day, regulation is going to be a good thing for the space because it's going to bring more capital in the space. And what drives prices? More capital into the space is what you need to drive prices up. The less capital there is, the more prices will drop. And the manipulation can only drive price so far, which we are going to take a look at right now. And here's a big drop right here, the biggest drop of the day. And this is Netflix, which is currently down right now about 38% over the last 24 hours. Huge drop for Netflix, trying to figure out its support level to see if there's going to be another leg down. All of the tech stocks are going to be repricing. This is earnings season with the Fed meeting coming up. If the Fed is out of the market, raising interest rates, quantitative tightening, reducing their balance sheet, the tech stocks are going to take the biggest hit. And as we see today, NASDAQ is down 1.1%. Of course, it was up 2% yesterday. The Dow Jones was up 500 points yesterday. It's up a couple hundred points today. S&P is kind of flat. So interesting times in the tech sector. Those valuations were out of control. All of the most all stocks valuations were out of control, but some of them have gone through repricing. If we take a look at on the daily, if we take a look at the Dow Jones, and continuing to put in lower highs on its way down, but it was up here the last couple of days. NASDAQ, same thing, continuing to put in lower highs, down obviously for the day-to-day. S&P, again, on the lower high watch. Now we're on lower low watch. So looking for continuation, we're looking for a lower low to put in back below these recent low levels here that we saw back on the 15th of March. So depending on what happens with the Fed and with the war in Ukraine, any type of escalation, any kind of a nuclear conflict, obviously you'll see the markets react and you'll see a big sell-off. Here's Bitcoin in this, larger range that we've been following. And again, you have cycles, ranges, and trends. So the Bitcoin cycles have been the 4-year cycle from peak to peak. And typically we've seen those peak in November, December, the last few years. So the question is, like if you look at the Pi cycle top indicator, and a lot of analysts believe that the 64,000 was the top, even though Bitcoin did hit 69. This was potentially the irregular correction. So let's just call this the peak, November of 2021. So the 4-year cycle would put the last peak December 15th, 2017. Prior to that, you had a peak December 13, 2013. Then, of course, before that, you had 2011. That was a June one. But other than that, it's been December. Pretty much November, December is where the peaks came in the last couple of cycles. And what we've been looking for on Bitcoin specifically, and this relates to all the crypto assets, Ethereum pretty much following suit, Avalanche, all the major altcoins are all following the exact same price action right now because, again, it's algorithmic trading formulas and bots that are basically controlling the markets right now because there are not a lot of retail buyers jumping in. So this is just range trading. And there's a lot of opportunity, a lot of money to be made in the ranges. And as you know, all the banks, like we've been talking about, and investment shops are setting up trading desks for crypto if they don't already have them, and just waiting on a little final regulation and clarity before they really get after it. But these ranges, again, the cycles, those are the 4-year cycles or longer trend, however you want to look at it, is the cycle of Bitcoin. And then within the cycle, you have ranges. And right now we are in a macro range right here where price has been trading basically between 28 and really that $69,000. That's the range of trading that we've been in. What we've been looking for since this drop is a retracement to the 618 or 702 level, or even the 0.5 level. In the last one, it was right here. This correction here was the original retracement that what I was looking for there was for Bitcoin. It got up above the 618, almost to the 702, rejected and started rolling over. So I was expecting that to roll over into a longer term consolidation before it went on for another run. But the market makers came in and the whales and manipulated this back up to a $69,000 peak, ran out of gas, and it's been downhill ever since. So now I have been looking for that retracement on this trend, and we haven't got it yet. So right now, from the wick low, we haven't even hit the 0.5 yet of a retracement. So I've been watching for retracement to that 0.5 level, break that, you go to the 0.618, possibly the 702. And again, that puts price in this range anywhere in the 58,000 to the 51. So the 51 to $58,000 range is what I've been looking for before a rollover into a longer term consolidation before the next run. And then looking for, what would the low of that consolidation be? Right now, you would expect to go back and test that $33,000 low. That breaks, you go back and test the $28,000 low. There's a lot of confluence with that $28,000, $25,000 market. And we'll take a look at a couple of things where that confluence comes in. One is moving averages. Right now on the daily, still below the 200 and currently rejecting off of that 100. And what we were really looking for was price to find support on the 100 and continue up, find support on the 50, and then continue up to get above that 200 again. This is the daily chart that we're looking at. So right now we have Bitcoin has lost that all major moving averages right now, depending on where it closes tonight. and that 100 days coming in right at 41,300. So price would have to get back above that on a close to get above the 100-day moving average. If we look at the weekly, what we have been tracking is this cross potentially coming in on the weekly. Some people are tracking the 3-day death cross, and that's always led to a major sell-off. But this is on the weekly chart right here, and this potentially, depending on where it comes in at, could cross somewhere in the next couple of weeks, probably around that, end of May. Depending on where that goes. Yeah, probably into June, around the end of June, where this weekly death cross could come in, depending on what price does and how fast price moves. And generally, whenever Bitcoin has lost the 100-day on the weekly, it goes down and tests, the 50-day, the 100-day on the weekly, it goes down and tests the 200-day pretty much every time and finds support there. So that's what we've been tracking, is if and when that happens. And let's say that cross comes in kind of like we're tracking right here around the end of June, somewhere around there, and this price is kind of moving along like this in that time frame, depending on that arc, that's around that 25,000, $25,000 Bitcoin mark right there. So that's one level of confluence there that could potentially happen. The other thing that we have been tracking is the Gaussian channel. And whenever you lose the midline of the Gaussian channel, you go down and check the bottom line and potentially break down below. And price has broken below on the weekly of the Gaussian channel a couple of times. And when it does that, it breaks down from the point of breakdown about 50%. So right there, it lost it right here again. That's about 45%. If you go over here and look back in 2017, 2018, it was about 40%. So let's take, and then the pandemic, which is an outlier, but still is what it is, that was 37%. So let's just say 40% from the bottom of the channel where it loses it. So depending on where that breaks, that again puts price down a little bit lower around the $20,000 mark. But again, it all depends on where it comes in when it loses it. The longer it takes to lose that bottom of the channel, the higher the price. So let's just say, tracking around that end of June timeframe about right here. So if you go down 40%, that puts you in that $21,000 range. So the mid to low 20,000 range is probably the worst case scenario given general market conditions without any kind of a major issue in the stock market. As we know, Bitcoin and crypto have been tracking right along with the stock market. Let's get back on the hourly here. And Bitcoin's kind of working its way down back on this hourly, kind of unwinding this whole move. It retraced this valley here to a point. I was looking to see if it was going to retrace back up here to that 43,000 level before it unwinded, but it looks like it's unwinding right now. And of course, all of the major altcoins has pretty much the exact same price action. So this is how you know markets are manipulated, when you see the exact same price action across all of the major altcoins and even some of the smaller cap altcoins. When you're looking at the same exact type of price action, percentage range moves, things like that, you know that that's manipulation, and that's algorithmic trading bots that are doing that. So that's what you can be on the lookout for to know what's going on there. So those are the things I'm looking at right now, and we will continue to watch the markets. It'll be interesting to see where Netflix settles, if there's another leg down there. Some analysts are calling for somewhere around, let's take a look at that again, because I know some people are watching Netflix, and some analysts are calling for some pretty aggressive prices there. So let's take a look at some support levels here on Netflix and where this price could potentially go. So let's look at it on the daily. And right now, price has lost all major support here. This goes all the way back to 2018. This is December 2018, the last time the Fed raised rates, when the whole market sold off. Of course, there's the March 2020 low right here. So right now, Netflix is well below those levels. The next level of support looks like around $205, somewhere around there. I had a buy order put in at 205. It hasn't hit that yet today. So I was looking for price to get down to the 205 area. It got down to 213. And, there's a little bit of support there. If it drops, your next level of support is $130. So analyst calls are kind of all over the map right now in terms of where this could go. And again, a lot of these tech stocks are repricing, so it'll be interesting to see where Netflix goes. We'll keep an eye on that one. So until the next video, I hope you have a great day, and we'll see you soon.